discuss Section 5, Chapter 10, Earned Income Credit. Let's see what is the first question. To receive the earned income credit, the taxpayer must A. File a tax return, B. Have earned enough money to file a return, C. Owe tax, D. Have had income tax withheld from his pay. Let's see what is the answer. The answer is file a tax return. Let's see why it is A. So here option B, this option is not accurate because the earned income credit is available to individual with earned income below certain income thresholds, regardless of whether they are required to file a tax return. In fact, filing a tax return is necessary to claim the credit even if the taxpayer's income is below the filing requirement. And option C, this option is incorrect because the earned income credit is a refundable tax credit. It is designed to provide a refund to eligible individuals even if they do not owe any taxes. In some cases, the credit can result in a tax refund that exceeds the amount of taxes withheld from the taxpayer's pay. So option C is wrong. Option D, this option is also incorrect. While having income tax withheld from pay can be an indicator that the taxpayer is earning income, it is not a requirement for receiving the earned income credit. The credit is based on taxpayer's earned income, filing status, and number of qualifying dependents rather than the amount of tax withheld. So option D is wrong. The correct answer is A. File a tax return. So here, to receive the earned income credit, the taxpayer must file a tax return. The earned income credit is a refundable tax credit designed to provide financial assistance to low-income individuals and families who have earned income. So let's go to the next question. Regarding the earned income credit, which of the following statement is true? A. The eligibility rules for earned income credit only apply to single parent household. Option B. A single person with no dependents cannot claim the earned income credit. Option C. Generally, those claiming earned income credit must have investment income greater than 10,300 for the year 2022. D. The filing status cannot be married filing separately to claim the earned income credit. So let's see what is the answer. The answer is D. Let's see why it is D. So here option A, eligibility for the earned income credit depends on various factors such as income, filing status, and number of qualifying child or dependents. Single parents may qualify, but the credit is not limited to single parent households only. So option A is wrong. Option B, here the credit is often associated with individuals qualifying children, but there are provisions for individuals without dependents to be eligible for a smaller credit amount. So even with if a taxpayer has no dependents, they can claim the earned income credit. So option B is wrong. Option C, the statement regarding investment income greater than 10,300 is not true. Investment income does affect the eligibility and calculation of the earned income credit. So, but here the specific threshold amount for investment income can vary from year to year. For the year 2022, the threshold for investment income that disqualifies someone for claiming the credit is greater than 10,300. So, to claim earned income credit, investment income must be lower than 10,300. So if the investment income is greater than 10,300, they are not eligible for earned income credit. The answer is D. So here, when married taxpayer file separately, they are generally not eligible for many tax credit, including earned income credit. So this restriction is in place to prevent married taxpayer from potentially benefiting from the credit by splitting income between two spouses in a way that could result in a higher credit than they would be entitled to if they filed jointly. Let's go to the next question. Which of the following earned income credit eligibility rules does not apply to everyone? Option A, taxpayer must have earned income. Option B, taxpayer must have a valid SSN. Option C, taxpayer must have a qualifying child that meets the relationship age and residency test. Option D, investment income must be 10,300 or less for 2020. Let's see what is the answer. The answer is C. Let's see why it is C. So here option A, B and D apply to all individuals who want to claim the earned income credit. Option C only applies to taxpayer who have qualifying child. So if a taxpayer otherwise qualifies, he can claim the earned income credit even though he does not have a child, qualifying child. Even though he does not have a qualifying child, taxpayer can claim the earned income credit. So the earned income credit has different rules and calculations depending on whether or not the taxpayer has qualifying children. So for taxpayers without qualifying children, the maximum credit amount is lower, and there are additionally uh, age and residency requirements that need to be met. So let's go to the next question. For 2022, those claiming earned income credit cannot have investment income greater than option A 4,000, option B 1,000, option C 3,300, option D 10,300. Let's see the answer. The answer is 10,300. So here those claiming earned income credit for 2022 cannot have investment income greater than 10,300. Let's go to the next question. G1's W2 comprises his entire adjusted gross income of 17,000. During the year, he files as single and has no qualifying child. Can G1 age 24 claim the earned income credit? Option A, he cannot claim the earned income credit because he does not have a qualifying child. Option B, if he otherwise qualifies, he can claim the earned income credit. Option C, he cannot claim the earned income credit because his AGI is over the requirements for a single taxpayer without an eligible child. Option D, he cannot claim the earned income credit because the earned income credit rules requires a single taxpayer to be over the age of 24. Let's see what is the answer. The answer is C. So let's see why it is C. So earned income credit has income limits that determine eligibility. So the income limits vary based on the filing status and whether or not the taxpayer has qualifying children. So for here for a single taxpayer without qualifying children, the income threshold for 2022 is 16,480. Since here AGI of G1 is 70,000, it exceeds the threshold. So option C is the correct answer. Let's go to the next question. Feroz and Hasina are married. They have one qualifying child. Feroz worked as a gardener and earned 9,000 during the year. Hasina is a non-citizen and cannot get a SSN. Can they claim the earned income credit? Let's see the options. Option A is if they otherwise qualify and file a joint return, they can claim the earned income credit because they have a qualifying child. B, if Feroz otherwise qualifies, he can claim the earned income credit by taking benefit of a single taxpayer with the qualifying child rules. C, they cannot claim the earned income credit because Hasina is not a US citizen and cannot get a valid SSN. D, Feroz can claim the earned income credit only if they file separate return and Feroz claim the child. Let's see the answer. The answer is C. So let's see why it is C. Here to claim the EIC, one of the eligibility requirements is that all individuals listed on the tax return must have a valid SSN, which is issued by Social Security Administration. Since here Hasina is a non-US citizen and cannot obtain a valid SSN, so they would not meet this requirement and cannot claim the EIC. Let's go to the next question. Which of the following is not a test to determine if a child is a qualifying child for the EIC credit? Option A, relationship. Option B, residency. Option C, support. Option D, age. Let's see what is the answer. The answer is C. Let's see why it is C. So option A, option A, relationship. The child must be the taxpayer's child, stepchild, foster child, sibling or descendant of any of them. So option A is a test to determine the EIC credit. Option B, residency. Here, the child must have lived with the taxpayer in US for more than half of the tax year. So option B is also a test to determine EIC. Option D, age. The child must be under the age of 19 at the end of the tax year, or under the age of 24 if a full-time student, or any age if permanently and totally disabled. So D is also a test. So the correct answer is C. This is not a test for qualifying children. The support test is typically used to determine if a child is a dependent for other tax purposes, such as claiming the dependency exemption or child tax credit. Let's go to the next question. With regard to the earned income credit, which of the following rules does not have to be met in order to qualify for the credit? Option A, taxpayer must have a valid SSN. Option B, taxpayer's investment income must be 10,300 or less. Option C, taxpayer must have a qualifying child. Option D, taxpayer must have earned income. Let's see what is the answer. The answer is C. Let's see why it is C. So here option A, this is a requirement for claiming the EIC. All individuals listed on the tax return, including the taxpayer and any qualifying children, must have valid SSN issued by Social Security Administration. Option B, this is also a requirement for claiming the EIC, but the specific threshold for investment income can vary from year to year. For the tax year 2022, the threshold for investment income that disqualifies someone from claiming the credit is 10,000, greater than 10,300. The next option, D, taxpayer must have earned income. This is a fundamental requirement for claiming the EIC. The credit is based on earned income, which includes wages, salaries, tips, and self-employment income. So individuals without earned income are not eligible for the EIC. So the answer is C. Taxpayer must have a qualifying children is the correct answer, because even if a taxpayer does not have a qualifying children, can also claim the EIC credit. Let's go to the next question. Which of the following filing statuses qualify for the EIC? Option A, MFS. Option B, single. Option C, both single and MFS. D, neither single nor MFS. Let's see what is the answer. The answer is B. Here, the EIC is available to individuals who meet certain income and eligibility criteria. There are different filing status such as single, MFJ, HOH. So there are filing status like single, MFJ, HOH, and MFS. Out of all the filing status, MFS do not qualify for the EIC. Single taxpayer may claim the credit if they meet all the requirements for taxpayer without qualifying children. Let's go to the next question. Which of the following condition would not prevent an individual from qualifying for the earned income credit? Option A, age 24. Option B, investment income of 15,000. Option C, MFS. Option D, being a qualifying child of another person. Let's see what is the answer. The answer is A, age 24. Let's see why the other three options are wrong. So investment income of 15,000, this would prevent an individual from qualifying for EIC. For the tax year, the investment income must be 10,000 or less to be eligible for the EIC. So option B is wrong. Option C, choosing the MFS filing status generally disqualifies a taxpayer from claiming the EIC. The EIC is generally not available for married filing separately. And option D, if an individual is claimed as a qualifying child on someone else's tax return, they cannot claim the EIC themselves. So option D is wrong. Correct answer is A. Age 24 would not prevent an individual from qualifying the EIC. But they should be under 65 to qualify for the EIC. Let's go to the next question. Assuming all of the other requirements are met, which of the following taxpayer qualifies for the earned income credit? Option A, Jagan is single and has 2000 of self-employment income. The deduction for one off of his self-employment tax is 141. Option B, Jeevan has interest income of 4000 and earned income of 18,000, is single. Option C, neither Jeevan nor Jagan qualifies for the EIC. Option D, Jeevan and Jagan both qualify for the EIC. Let's see what is the answer. The answer is A. So let's see why it is A. Here option B, based on the information provided, Jeevan does not qualify for the EIC. Here, to be eligible for the EIC, taxpayers' earned income must meet certain requirements, and the maximum earned income limit for single individual without qualifying child for the tax year is 16,480. Here, since Jeevan's earned income is 18,000, he does not meet the eligibility criteria for the EIC. So option B, C, D is wrong. So option A, Jagan can claim the EIC. So his income for EIC purposes is 1859. So Jeevan can claim the EIC because there is limit to the amount of the investment income a person can receive and still qualify for the EIC. Let's go to the next question. Taxpayers who claim the EIC based on one or more qualifying children are required to attach which form to their return? Option A, Schedule EIC. Option B, EIC worksheet. Option C, a copy of the taxpayers and each of the qualifying children's social security card. D, EIC eligibility questions. Let's see what is the answer. The answer is Schedule EIC. Let's see why it is A. So option D, EIC worksheet is not the correct answer because EIC worksheet is used to calculate the credit, but it is not required to be attached to the tax return. Option C, a copy of the taxpayers and each of the qualifying children's social security card is also not required to be attached to the return for claiming the EIC. So it is important for the taxpayer to have and provide accurate social security numbers for themselves and their qualifying children. So option C is wrong. Option D, EIC eligibility questions is not required to attach to the written. Taxpayer must answer the eligibility question accurately to determine if they qualify for the EIC. So the answer is A, Schedule EIC. So here Schedule EIC is a specific form used to calculate and claim the EIC when a taxpayer has one or more qualifying children. So it is necessary to complete the schedule accurately and attach it to tax return when claiming the EIC based on qualifying children. Let's go to the next question. Tarun is a widower with one qualifying child. His earned income and AGI are both within the limits for EIC eligibility. Part of Tarun's income was $605 that he earned while in Mexico for 2 weeks. If Tarun wants to claim the EIC, you should make sure that he does not use Form 2555 foreign income credit to exclude his foreign income from his gross income. Option B, uses Form 2555 foreign and earned income to exclude his foreign income from his gross income. Option C, attaches a copy of both his and the child's social security card to the return. Option D, uses the HOH. Let's see what is the answer. The answer is A. So let's see why the other three options are wrong. Here option B, using Form 2555 to exclude foreign income, is incorrect because here it would exclude the foreign income from the calculation of EIC and potentially affect the EIC eligibility. So option B is wrong. Option C, attaching a copy of both his and child's social security card to the return is not correct because here accurate social security numbers are important for EIC eligibility. Attaching the social security card themselves is not required. So option C is wrong. Option D, using HOH status is not specifically necessary for claiming the EIC. The filing status for claiming the EIC can be single qualifying widower with a dependent child, HOH or MFG. So option D is wrong. Option A, here EIC is based on earned income, which includes wages, salaries, tips and self-employment income. And foreign earned income is generally not eligible for the EIC. And using form 2355 to exclude foreign income from gross income would result in reducing the earned income amount. So option A is the correct. See the next question. Lazar and Lucy are married and live together. Their combined earned income is 22,222. Lazar reports a AGI of 10,729 on his separate tax return, and Lucy reports AGI of 11,514 on her separate tax return. Peter, their 4 years old son, lives with them. Can Lazar and Lucy claim the EIC? Yes, because they meet the income requirement. No, neither Lazar nor Lucy can claim the EIC. Yes, Lazar and Lucy can both claim the EIC. D. Yes, either Lazar or Lucy can claim the EIC. Let's see what is the answer. The answer is B. So here, to be eligible for EIC, married individual must generally file a joint return. In this scenario, both file separate returns, which means that they cannot claim the EIC. So option B is the correct answer. Let's go to the next question. Which of the following would prevent a taxpayer from being eligible for the EIC? Option A, filing a joint return with a spouse who does not have a social security number. B, earning income in a foreign country. C, being married to a non-resident alien. D, receiving 3,100 in investment income. Let's see what is the answer. The answer is A. Let's see why the other three options are wrong. So B, earning income in a foreign country itself does not automatically disqualify a taxpayer from the EIC. Certain types of foreign income, such as foreign earned income excluded using form 2355, may not be considered eligible earned income for the EIC. So option B is wrong. Option C, being married to a non-resident alien. Here, being married to a non-resident alien does not necessarily disqualifies a taxpayer from EIC. If the taxpayer chooses to file a joint return, the non-resident alien spouse would need to have a valid SSN to meet the eligibility requirements. Option C is wrong. Here, option D, having 3,100 in investment income would not automatically prevent a taxpayer from being eligible for the EIC. The investment income threshold for disqualification from the EIC is typically higher. For the tax year 2022, the investment income is 10,300. So the answer is A. To be eligible for the EIC, all individuals listed on the tax return, including the taxpayer, spouse, and any qualifying children, must have SSN issued by the Social Security Administration. If the spouse does not have a valid SSN, it would disqualify the taxpayer from claiming the EIC. Let's discuss the remaining questions in the next session.